We're enjoying a bit of a momentum trade with central banks being more accommodative. I think the data looks in a relative sweet spot for what the sort of market's after at the moment. It looks as though it's strong enough to avoid a recession, but not strong enough to get the Fed particularly hawkish in their rhetoric, because I suspect we won't see any move on policy rates, but everyone will be eyeing up the language. And absent very firm inflation and economic data, I think they'll be talking in a benign fashion. That keeps the trade going, and who knows, maybe we'll be talking about helicopter money later in the week with the Bank of Japan meeting also this week.
My impression,
probably not,
being at the press conference of the ECB, was that Draghi just didn't want to go anywhere near it because the ECB doesn't have a mandate for it, and it would be to go down that path would be in direct breach of the monetary financing that we've seen by the BOJ and by other central banks. So it's just not going to happen. So does that mean that we're going to, the fact that he cannot go in that direction, does that somewhat limit the upside potential for European markets just on pure policy grounds?
Well, he has been known to deliver a sort of shock and awe. So when he has acted with intent. There was one disappointment, wasn't there, late last year when he really fell short of market expectations. But recently, the TLTROs, the conditional financing, we're paying banks to lend. He's doing everything he can, I think, on the supply side. It's just over whether the demand can now come through. But I do think you're right. Helicopter money in Europe, as he almost explicitly said, is too much of a legal hurdle to overcome. And while financial conditions are easing, perhaps he's got a bit of breathing room anyway to see how these current policies he's employed pan out.